Hello, I'm Danielle Smith, president of Alberta Enterprise Group, and this week I'm really stepping outside my comfort zone. Although I did that a couple of weeks ago with cement and concrete. I didn't know much about that industry as well, but I feel like I've been asleep for the last couple of years because we have had such an amazing boom in technology and startups in Edmonton and Calgary, some really interesting organizations doing some fascinating things to bring together some of these bright young minds in the tech space with investors and sponsors to make sure that their pitches can be heard. Now, last week, if you saw me interview Premier Jason Kenney, one of the things I was asking him about is what is the regulatory environment or government policy environment that we need to have in order to continue to attract angel investors, because that's that realm before you're profitable, but even before you have revenue, where you still need to have some of the startup costs covered. Well, we're going to be talking to a couple people today who have some ideas on what that should look like. Let me first introduce Zach Storms. So Zach Storms, you will have heard of if you're in the tech space, because he has a major pitch event. This is the third one, major pitch event happening tonight. I'm amazed he was able to make some time for us. I'm so glad he was able to, so that you will not miss out on this, because as soon as I heard about it, I went and signed up for it as well. He's with Startup TNT. Zach, thanks so much for being with us.
Thanks for having me, Danielle. Great to be here.
I can hardly wait to get into this with you. And also Brian Wyatt. Brian Wyatt is an investor in the tech space, and he's been doing investment across Canada. And so he's going to give us some context for how it is we're doing in Alberta relative to the rest of the country, in particular Quebec, because Quebec has a bit of a different model for how they do investment. So let me begin by talking to Zach about Startup TNT, where it all came from, because as I say, I feel like maybe it's like I'm tuning in for the last game in the last series of the NHL playoffs, and I've missed the entire season. That's kind of how I feel about this. So Zach's going to tell us what we missed, but don't worry, because tonight is the big finale. So Zach, first let's begin by you telling us a bit about what your background is and how it is you decided to start up TNT.
Sure. Yeah. We have grown very quickly in the last 2 years. We're flabbergasted at the growth. It's really exciting. It all started 2 years ago. My background's actually in chemical engineering. I have a PhD from McGill. I've lived here in Alberta for about 8 or 9 years now. And 2 years ago, after working as an entrepreneur, trying to build a company, I was just personally feeling a little disconnected from the community. I also have a lot of friends in the angel investment community. There's a lot of people sort of out there thinking that we need to do better as a community, no one really knowing what to do about it. And my philosophy was, look, we just need to have fun, make friends, build companies together. It's a simple philosophy. Back when I was a graduate student, my supervisor used to take us out for drinks every single Friday. He'd buy the beers. It was a great time. I'm like, where are those kind of community gathering points for all the entrepreneurs and angel investors where they can just get together and do business together, have fun together, make real relationships? So we launched the happy hour. Started with a happy hour. TNT stands for Thursday Night Tradition, because we meet every Thursday. Launched at a great local brew pub called Polar Park Brewing. And at the same time we launched the happy hour, I'd heard of this concept called an angel summit. So we're having an angel summit tonight. We call it the Startup TNT Investment Summit. Basically, it's a way to introduce people to angel investing and help raise money for local companies at the same time.
Okay, I'm going to get you to unbundle that a bit. First of all, it's so funny that TNT would stand for beer. I should have known that in Alberta, as opposed to dynamite, which is what I thought. Like, it's an explosive growth, so you actually chose a good name.
Yeah, it's a double entendre. It stands for both.
No kidding. So when was your first TNT night? How long have you been in operation for?
I remember it clearly because it was May 16th, 2019, my 35th birthday. I told my wife that, our daughter was 3 years old. I finished my MBA. I was ready to go embrace the social world again. And I said, I want to go drink beers with my friends for a year. Are you okay with this? And she said, go for it, Zach. So I threw it on my 35th birthday party, and we've been drinking beers, having fun with the startup community ever since, every Thursday.
So a couple of years now. That's awesome. So tell us about tonight, because I know we won't be able to keep you for the full time, because boy, you've got a pretty big program this evening. I signed up for it so that I know your event is taking place from 4 p.m. until 8 p.m. You can sign up on Zoom, but you also live stream it so people can watch it on YouTube as well. But go to startuptnt.com so that you can register. But let's walk through and you can tell people what it is that they'll experience. So I guess in keeping with tradition, you're starting up with your welcome, so to get the party started, and a happy hour chat. That seems to be entirely appropriate. But you are also collaborating with Platform Calgary. So this is, again, because I'm new to this whole area, tell us what the collaboration with Platform Calgary is all about.
Yeah, so Platform Calgary is a great group out of the Calgary ecosystem. They're backed by the city of Calgary, and their mandate is really to just spur more innovation and more entrepreneurs taking the plunge and building great companies in Calgary. So we've worked with them a lot in the past, and tonight we're doing a very fun event that we call Startup TNT Jeopardy. Our philosophies have fun. We think that we should be casual, lighthearted, really create the environment where everyone likes to enjoy themselves. And so we have a couple of prominent people from the community joining us for Jeopardy. We ask just some fun questions, set the mood for the event, and then we're going to do that fireside chat with two prominent entrepreneurs that just raised some money for their companies. And then it's pitch time.
So tell us what I'm going to bring Brian in a minute, because I know that he's been an investor and sponsor in the past, but tell us what these final pitches are all about, because I need to understand a little about the process that you've gone through to get here. Because you've already, as I say, we're getting to you at the last day when you're choosing when the finalists are making their final pitch and you're choosing one of them. But what was the 8-week process leading up to this?
Yeah, and Brian's on the call. He participated in the very first event that we did. So the event today is really a culmination and a celebration of all that we've accomplished. We get investors to pool their money together into a specific syndicate. So we get about 25 to 30 investors. They each put $5,000 into the syndicate. So our goal is to have a minimum $150,000 in total from 30 investors. They all work together to do due diligence, deal screening on the companies that apply. It takes place over an 8-week process. They meet weekly as a group to share notes. They split up into small teams, and they conduct due diligence and research and meet with the entrepreneurs, negotiate deal terms, figure out, what's good, what's bad, where the real opportunities are, which of these entrepreneurs are the most credible. And then we go from all the applicants down to a final 5. Those final 5 present tonight to a friendly, celebratory audience. It's not just the investors. We invite the entire community. We've already sold 320 tickets. Help us get to 350. We're really about celebrating the entrepreneurs, building them all up together. They're not all going to raise money, but all 10 of them, there's 5 from Calgary, 5 from Edmonton, all 10 of them, really great companies. And I think we're going to see more than 2 raise money at the summit. I think there's a real probability for that.
Oh man, Zach, you've got me excited all about this as well. The way you've got so much energy. Let me ask Brian from the perspective of an investor, because it sounds like you've had to do a lot of work in whittling it down. What are the kind of things that you're looking for in a successful startup company?
Well, I mean, I just want to first talk a little bit about Zach, and I think it's quite obvious to see why I'm so excited to hear that there's people like Zach in Alberta promoting the tech sector, because I didn't know a lot about, I've lived in Alberta all my life, but I ran a national advertising company, and I spent most of my time in Toronto and Montreal. So when I sold my business in 2019 to Bell, I was a little lost. I didn't know where to go. I literally, I'd heard about Economic Development Calgary, Edmonton, Innovate, Startup Edmonton, Startup TNT, and it's confusing. And Zach and I have talked about this, maybe over a beer or two. And I was introduced to Zach through John Pinsent, who's a legend in Alberta, an investor and accountant. And he's like, you got to meet Zach. You're gonna like what he does. And I just love the format. I love the style, and just being able to go Thursday and meet these tech entrepreneurs, 17, 18, 20-year-olds. I mean, brilliant minds, incredible vision. And then having a beer and just talking to them about what they're doing. And I was just astonished. I'm like, why do I not know about this? There's a company out of the U of A that literally launches satellites, low orbit satellites. It's there's another company that is involved in cellular agriculture, growing food in petri dishes. I was almost I was almost upset. I'm like, how do we not promote this more? You're growing a chicken nugget way cheaper than anyone else in the world globally, and you're having a hard time finding money. And you had to go to Singapore to get money because they have such a demand on food supply. And don't quote me on this, but by 2030, they're going to have a serious look at how they're going to supply food for their population. If there was, obviously another pandemic or whatever. So they have to have options. And I just fell in love with TNT and just wanted to get involved. And then when I saw the caliber of people pitching from, Wyvern and Future Fields and Dive Through, and I feel bad for not being able to name them all, but just know it. And then I quickly realized a lot of these ideas are dying on the tables at U of A or U of C, scientists coming up with incredible ideas, and they're not able to access the investment. And if you look at the numbers, VC investment in Alberta, I think 2019 was around 225 million. Quebec's what is it? I got to look here. 1.6 billion. Like, why are we 15% of Quebec? We're 4 million population. They're 8.5 million population. Should it be? I'm not a math major, but something seems odd there. So I just think that we as a group in Alberta, and to get back to my point, I came back to Alberta after I sold my business, and my business partner's from Montreal, and he's 12 years older than I was. I wasn't ready to retire. So I wanted to give back to the community and volunteer my time. And doing that, meeting Zach, I've been able to meet a lot of these entrepreneurs and invest personally in some of their businesses. And it's just been fantastic. And my biggest thing about this is that we just got to let more people know about us in Alberta, but then on a global stage, we need access to global markets and we need access to global investment. And we're not going to do that on our own. We need the Alberta government to help us, and we need them. I get it. They're not in the business to fund companies, but we're not asking for a lot of money here. We've got startups that, $10,000, $20,000, $15,000 could fundamentally change the way they look and grow their business. And again, I wouldn't wish it on my worst enemy to get into politics right now, but but realistically, I would literally walk around with a checkbook and go around and meet some of these scientists and inventors and people at the universities and colleges and just say, what are you working on? What can I do to help you? Like, we should, should we set up coding camps? Should we be setting up tech hubs? Have committees with each minister. We've got to do more than we're doing. It's like, I think we're quickly learning we can't keep doing the same thing over and over again and expect different results. The facts are we're at 15% of what Quebec is for investment. So we need some help here. And people like Zach are the people that are going to do that. But we've got to give Zach and his entrepreneurs and the tech people some help.
Let me go back to Zach for a minute, because I do want to talk to you as well some more, Brian, about what it is that Quebec is doing. Because when you look at it, they're twice our population, or we're half their population. So if they've got 1.6 billion investing, if you want to do equivalency, to be punching at our same way, we should have 800 million in investing. We're only a fraction of that. So we're going to talk about some of the reasons for that. But Zach, why don't you tell me, because here's, I guess, the biggest surprise of what I just heard Brian say, is it's not a whole lot of money that's needed. It's not like they're asking for a 10 million or 100 million or $1 billion investment. Why is it that 10 or 15 or $20,000 can make such a difference? Tell us a little bit about what entrepreneurs tell you so that we understand why it is that is really the catalyst to get them going.
Yeah, I think that Brian's actually really hitting the nail on the head. There is, when you're first starting out as a business and you're testing out the idea, there's not a whole lot to go on in terms of like due diligence. Like, is this idea going to work? Where is this going to go? You don't even have a product yet. You have an idea and you're trying to experiment and figure it out. And honestly, that's where a small investment is going to go a long way. A lot of entrepreneurs will raise what's called friends and family money, which will often be maybe up to 100,000, but even a $10,000 or $25,000 check could just give them a little bit to test things out, validate that the idea is going to work, use low-cost, lean methodologies to validate the market, talk to customers, nail down the strategy, sort of de-risk some of the idea. And you know what? Friends and family money is super, super valuable, but it's really limited because there's only certain people among us that have access to friends and family that can throw that kind of money around. So I think there is an opportunity for the government to look at themselves as investors and say, you know what, we can fill in the gap where there aren't enough friends and family to go around. We could be investing directly in these companies at $10,000, $20,000, $50,000 checks before they're ready to raise an angel round for $500,000 or $1 million, before they're ready to raise a VC round for $5 or $10 million. I think there's a lot.
There probably is, but here's, I guess, the question: it's a hard pitch for government to say we're just going to put 10 and 15,000 or $20,000 out there, because there's a lot of ideas that don't make it past the idea stage, and so I think that's probably one of the barriers. Is there like how do you?
Sorry.
Go ahead. Yeah, I was just wondering how you manage that risk. Like, how do you make the pitch to government that a certain percentage of this is just going to go up in smoke?
Yeah, this is a real challenge, Danielle. You know what? The government likes to spend money on things that they can hold everyone accountable for. So like salaries, people attending events, people that are being reached. And like, I totally get that. It's like Brian says, it's really hard to go back to your tax base and say, we just blew up a bunch of money hoping that some of it would work. The results are mixed so far. We need to keep at this strategy for a long time. You know, it's a hard pitch to the tax base. But here's what, I just had a story with a friend, and he told me this. He's a professor at the business school, and he said one of our graduates is a VC out of the US, and this is their strategy for investing in Canada. They look for the entrepreneurs that have avoided the government support service system. They look for the entrepreneurs that are avoiding getting the help from all the government dollars, and they look for the entrepreneurs that are scrappy, doing it themselves, and figuring it out. So the VCs in the United States are looking for our Canadian equivalents that are really scrappy, not relying on over programming. I think that's a really interesting message to send to all of us that are trying to use economic development dollars effectively. Alberta Innovates is about to spend $25 million to bring in a bunch of accelerators and incubators and support services for the entrepreneurs. That could be a great investment, but it is $25 million. What if you just took that $25 million and said, let's just focus on these like sort of micro seed stage investments and see where it goes. I can't say that it's going to be a better investment, but $25 million is a lot of money to bet on some global names to come in here and fix everything for us. So I think they're both pretty risky bets in my opinion.
Let me get Brian to weigh in, because here's, in some ways you almost need a vetting process, kind of like what Startup TNT is doing. But I wonder if that's the way that you link them, is that you get people who are able to judge a good idea, and whoever emerges at the end of this process becomes a good candidate to get that initial seed money. Because it almost seems like a shame for you to go through all of this. I bet you're feeling regretful looking at these finalists that only one of them is going to get the $150,000. I bet a lot of them are probably worth it. Maybe you can shed some light on that as somebody who believes in this angel investment realm. How would you make the case to government on this?
I think that's 100% correct. Brian, do you want to go? You go ahead, Brian.
Well, I just wanted to ask you a question, Zach, and I don't mean to put you on the spot, but I just want an honest response on how many MLAs have been to your summit in person or virtually.
I don't think we've gotten any MLAs, but I am excited to say we have two candidates running for municipal election that are participating. So that's good.
Okay. So the facts are that no MLAs have been to your summit in person, because I didn't see them and I was at two. And have we had a lot of the Calgary council people attending the summits and attending or Edmonton?
Yeah, we could use help getting more introductions to tell a story to those people. Absolutely.
Yeah, but my point is that we talk about them not being nervous about using taxpayer money to invest in startups. Well, it doesn't cost a lot of money to attend these summits, walk around, hear about good ideas, have a drink, and just learn about what's going on. That's a little disappointing that they're not doing that more. And I'd like to see some more involvement. So I think that we need to reach out to the provincial and municipal governments and ask them to try to get more involved and, demand it. To be quite honest with you, they should be. It should be part of their mandate to get involved with startups. I mean, we have a fundamental problem. I mean, let's come back to the numbers. We have investment that's way lower than Quebec, Ontario. I mean, BC's 1.4 billion investment. BC's not that much bigger than Alberta. So we need to stop doing the things we're doing, and we need to start looking at what can we do differently, and how can we change the way we're thinking? How can we get involved with more things that involve robotics, AI, sustainability, the environment? It doesn't mean getting away from fossil fuels. That's not at all, in my opinion, what we should do. But we should use fossil fuels as a way to fuel growth in other sectors of the business that are growing in other parts of the world. And that's a big thing for me And I think that typically a lot of my friends, it makes them nervous when you talk about eliminating fossil fuels or getting off fossil fuels. You bring up words like sustainability of the environment, but we shouldn't be nervous about it. We should just look at it and say, how do we make this world a better place for our future generations? I mean, I have 19 and 20-year-old boys. I mean, I want us to adapt. I don't want Alberta to be left behind. I want us to be a leader. And we have an opportunity to harness all these resources we have and to invest and to develop our technology and our business. And let's face it, they need to have, I'm an entrepreneur. Trust me, I've lost money on a lot of different things. But you know what? Sometimes you have to gamble. You have to throw money at certain things. And you have to have the political will and desire to try different things. Like, no, I'm still going to vote for a government if they actually just put an honest effort in. And you know what? They might lose a little bit of money here and there on a few startups. But at the end of the day, we've lost money and we've wasted a lot of money in this province on way worse ideas.
Well, let me go back to Zach to get some of the an idea of who the finalists are, so people can wrap their heads around it, because tech just seems so big. I think the first thing that you think of when you think tech is the monster companies, Google and Microsoft and Apple. But I think if we can break it down into little pieces so that we can understand some of the ideas that are coming up, I think it'll make it a little more accessible for folks. So give us some idea of who some of the finalists are here.
Sure. I'll just give you a couple of examples. So here in Edmonton, we have Honest Door, great technology company that is using artificial intelligence and machine learning algorithms and collecting data from a bunch of disparate resources to give everyone in Canada free access to really high quality real estate data. You can go to honestdoor.com. You can check the value of your home in Alberta. It's probably accurate. And if it's not accurate, you can let them know that they need to improve it, and you can improve it yourself. And it's really like a disruptive technology for the real estate market to really give transparent access to all the real estate data, and it's going to be super valuable. There's another company called Quote to Me that's basically digitizing workflows in the construction industry, so that big construction companies, they landed a couple of big construction clients, and we have a lot of construction here in Edmonton. So this is a great local success story. They have construction company clients that are using their technology to manage their entire bidding process and RFP process and sourcing different construction materials and interacting with their clients. And then we have like consumer products. Like there's a company, Birdie Break, that's making it easier for people to access a babysitter, or a company like Align VR, who has Airbus as a customer using their VR system to help to assist in their hiring process. So it's introducing these new digital AR, virtual reality, augmented reality, AI technologies to a lot of traditional industries.
And so what are people going to experience tonight? How does the pitch process work? And then I'll get Brian to tell us a little bit about some of the factors he's going to consider, as he's been an investor and sponsor in the past. I'm not sure if you're investing this round, Brian, but maybe you'll be inspired to. But tell us how the evening unfolds here.
Well, absolutely. The evening is all about celebration, high energy, excitement, trying to do that broadcasting that Brian's talking about. And we need help with this. We're trying to tell people, like, there are great companies here in Alberta. More of us that are from Alberta with money to spend, because a lot of us that are wealthy invest our money all over the world in publicly traded stocks. How much of it's going into our local ecosystem? Here's a great opportunity to invest in local, high-flying tech companies with a lot of potential. Some of these companies in the past have gone on to raise money from people like Y Combinator, the best VC investor in the entire world, some might say. And in the past, these companies have raised $2 million already from our group. They've raised something like $10 million in follow-on funding. And tonight, we're going to see at least 2 companies raise money. We're likely to see more. And we're hoping to see somewhere between $500,000, maybe even over $1 million being invested by our network tonight at the summit. But I do stress there's been 8 weeks leading up to this. That's why we're able to make the calls tonight at the summit. Right.
So I guess, is it done like, I'm trying to think, it almost sounds like a Dragon's Den style where you just get up there.
It's kind of like Dragon's Den, but it's real world in the sense that, the dragons see the pitches for the first time, and then they make a statement that they want to invest, but then they go do due diligence after. And the due diligence process can sometimes decide that they're not going to do the deal. We've already done the due diligence. The investors are probably honestly they have a really good sense of these companies. Definitely, we can see movement, though. The investors all vote individually on which company they think should be the winning deal, and we definitely see movement. The entrepreneurs are coming down to the wire. Their companies are moving quickly. They have last-minute updates. They're landing new customers. They're landing other investors. There's updates to their deals. It's a really exciting event. And the best part of it is, it's not a pitch competition where you win a prize. It's an investment process where real investors are putting their money in. Investing in Alberta companies.
And at the very end of the evening, we'll see one company emerge as the winner of the $150,000.
Well, actually, you'll see two companies because there's going to be a winner from Edmonton and a winner from Calgary, and then we'll see if there's side deals. So you might have multiple winners.
It's going to be amazing. Okay, so Brian, tell us what happens then, because you've gone into this as an investor. Tell us a little bit about the process, because there are probably people watching who are thinking, maybe I would like to do that. It doesn't sound like it's a huge, if you're doing it as a collective, it's not really actually a huge amount of money for each individual investor to put in. So tell us how it unfolds from your perspective.
No, for sure. And I did the investment and the sponsorship when we were doing in person, and I need to get back at that. And I think our goal is for the next investment, which I'll be an investor, will be in person, Zach. So we got to get that going. But I know that it's a lot of work. But, we spread the work out in the investments that I was involved with. We pick, you pick the 20 companies and 3 people volunteer the time to go and visit those companies in person or on phone. And you go through their pitch decks and you figure it out and you come back and report to the group. And I think we're meeting like once a week. And, Zach's not like sitting there going, you have to make every meeting, but if you're going to get involved, we expect, to try to do your best to show up or send someone in your place to be able to make some decisions. Cause you're making, these are people that spent a lot of their time and energy to put these pitch decks together in video. So if you're going to invest, I think it's respectful that you put the time and energy into at least monitoring and doing the due diligence and things like that. But it's not 8 weeks, maybe an hour or 2 a week. And if that, and it's a fun process. And at the same time, I invested in a company that didn't finish in top 10. So you just never know, right? So, so basically, it's just each individual investor has their personal choices, and sometimes yours don't finish top 5, but that's okay. It's a democracy. We vote, and the winner wins.
Let me then see if Zach can give us an update on what has happened in the past, because this is again round 3 that you're going to. Although you did a green tech investment round as well. Was that sort of an auxiliary one, or was that part of one of your other investments?
The Clean Tech Summit followed the same process as our standard summit, but we did it with some partners from the clean tech community and with a clean tech focus. So it was the first time we did a sector-specific summit. Honestly, a lot of people from the oil and gas industry participated. We're really excited about that. Over $600,000 or $700,000 has been invested through that event as well. We like to emphasize 3 things. I tell all the investors and the entrepreneurs, this is about 3 things. One of them is getting in on a good investment and getting a return, because this is angel investing. This is what we want. We're in business. We're trying to make money. We're trying to build great businesses. So getting a good return is one of them. But I think all 3 of them are equal. The other one is education, raising our game, understanding how to do things, making it approachable too. There's a lot of really successful people out there that want to get involved in the tech ecosystem, but it's kind of a niche thing. It's nuanced. There's language. There's term sheets that are confusing to people that haven't seen them before. So we try to make it approachable and share that knowledge together as a group. Especially and with the entrepreneurs as well. And then the third one is building relationships, building community. As an entrepreneur, you need to build relationships with people that can write checks for you. It's about building trust, building credibility, with investors in your network. And this is a great opportunity for entrepreneurs that aren't quite ready yet or know they're at kind of the very beginning stages. We say the ideal company is doing their first major round to get introduced to a team of supportive investors and start building those relationships. So even if they don't raise money, they get value out of it. And they're building their network for when they are ready to raise money.
But that's what I'm wondering. So there's only a couple of winners. So you say one Calgary, one Edmonton. What happens to the rest? I mean, they obviously still have an idea that they want to get capitalized. And you talked about side deals. Do you find that once you've got down to this process of winnowing it down to the top 10, do many of them end up with investors coming to support them, even if they haven't won the big prize?
Yeah, so I mean, I think that the quality of the deals is getting better and better. So we had 65 companies apply between the two cities this time around, and there's a handful of companies that aren't in the top 5 that I know are high quality companies. They're going to raise money, they're going to go be successful, but there's the investors are sometimes based on personal preferences for which deals that they're interested in, and that's fine. There's companies that are in the top 5 that I think are going to do side deals with various investors, or they're going to raise money on their own. But then there are a bunch of companies that maybe are building more mentor-mentee relationships. I think there's lots of opportunities to support these companies, even if the investors don't think they're ready to raise money yet, or if they just need a little bit more support from a mentorship or a guidance perspective, or maybe they can go through some of these other programs. This is where the government's partners can get involved in supporting some of these companies, or maybe if there was that $10,000 or $15,000 check that Brian was talking about, they'd all be a great fit for that. In partnership with some mentorship. So.
Let me then ask Brian, because here's the thing. It strikes me that if you've gone through all this due diligence, you've identified good companies, shouldn't that be the pitch itself? Shouldn't that be enough to get private sector investment involved in giving them more support? Or maybe there's a potential for a matching program. Maybe there's a potential for a different type of tax break. I'm just wondering why is the tech space so different? Why is it that you think it might need that extra boost? Why can't it all be done in the private sector?
Well, the facts are is that we're just not getting the investment from the private sector here. So we just need a little bit of assistance so that we can catch up. Maybe it's just a temporary type of assistance from the government. But there just needs to be a willingness from the government to help out, just show up, come in person, like just watch it. Let's sit down together. Like Zach, myself, a few other TNT people, like we'd love to sit down with the government, tell them what we're doing. And it's not just us. We want them to support all other organizations. It's not all about Startup TNT. There's some fantastic people in other organizations, from economic development, Edmonton, Calgary, to a variety of different funds that are doing amazing work. Sprout Fund is trying their best to raise money for a bunch of good companies right now, I know, and some really smart people over there. So the government I just don't want them sitting on the sidelines. It's like, Danielle, you took the time and energy and you took the interest to talk to me about Startup TNT after talking with Terry O'Flynn and John Liston, who I have a utmost respect for. And they were excited about it when they saw it. They talked to you about it. You talked to me. And, that's four of us now that are excited about it. So let's just spread the word. And I'm not saying we want handouts. I'm just saying that you can't sit on the sidelines. We're not going to develop that. We're not going to get the new, I was going to use Bill Gates, but Steve Jobs or, Mark Zuckerberg or whoever. We need those. Why can't Edmonton or Calgary or Red Deer or wherever, Fort McMurray, Grand Prairie, why can't these entrepreneurs come and be the leaders of the world? Like, we've got to stop thinking about us being Alberta. We need to look at ourselves as saying we have some of the best resources in the world. And how do we use those resources to make ourselves a tech hotspot where people want to come here and invest? And not a lot of countries not a lot of provinces, states have the resources we have, and have the schools we have. We have fantastic universities and colleges. And that's another, it's another thing. I don't want to be bashing, but I've got to. I need to disrupt this. We need to disrupt the madness and change things. But, we have to look at cutbacks. Is it the right time? And do you want to be cutting back universities right now? That's probably the brain power. That's probably where these people are going to come out of and these scientists are going to come out of. I know Carbicrete, which is a company that's disrupting the cement world, is they're developing concrete now using steel slag and carbon, and creating a carbon neutral concrete without the use of cement, which represents 6 or 8% of the world's emissions. Zach can correct me on that, but the reality is Carbicrete was an engineer from U of A, and now that engineer from U of A goes to McGill and now has Carbicrete running out of Montreal, generating millions and millions of dollars. Why can't we do Carbicrete here? And maybe we are, and Zach might know other similar companies, but I'm just saying we just need to change the way we look at things. If you look at my business, New Ad Media, I mean, I had 36,000 static boards. I was making good revenue selling static boards, but I knew if I didn't go digital and I didn't build digital screens, which costs a lot more money, way more investment, I knew I'd fall behind the other media companies out there. So I made the decision to invest in digital. And we had to be the top tech company when it came to hardware and software. And we had to change the way we looked at our own business. So I've been there. And then I built an automated platform called Campsite that made the process of buying digital out of home screens all over, in being able to buy those in an automated way. Again, I didn't need to do that. I was doing fine, but it was just, we knew we always want to be ahead of the curve. And that's the way the government needs to look at this. We just need to say, okay, let's allocate this percentage of our budget to whatever we can do to develop new tech and help these young entrepreneurs get their ideas off the tables in the college universities or at home in their basements. And let's get these ideas on the global stage.
Well, let me ask Zach about that. So give us a sense of what is going right in Edmonton. Why? And then I'm going to bring in another person for us to talk about what's going on right in Calgary. But tell us a little bit about what is going right in Edmonton.
Well, I want to bring up the private investment dollars, because that's actually something that is going right. Brian mentioned the 2019 number, which was only like 225 million, but it actually doubled in 2020 during the pandemic to around 500 million in like VC and angel money going into Alberta startups. So that's massive. So that's an indication that, we are on the right track. There is more private dollars going in. We have now more entrepreneurs doing massive rounds of like 80 million US dollars. And all of this is really important, because your question, Danielle, about how does the private sector just do this on their own? I think that there's a fundamental education that needs to happen. If you're a rich person in Silicon Valley, you have friends that invested in some like goofy app that's now worth billions of dollars. And you're like, yeah, this is a real investment opportunity. If you're a rich person in Edmonton or Calgary, you probably have friends that started like a trucking business that's worth like billions of dollars. It's just context. So like, that's what and so there's just education. And that's one of the big things that we try to do at Startup TNT. And that's where I think there's a massive opportunity with the groups like Alberta Enterprise Group to kind of show that, we can make a lot of money. There is a real opportunity here as private sector investments. Sorry, go ahead.
Well, no, continue, because I guess that's the other part of it, is that it's a different investment model, isn't it? Because you may have, it's been described to me this way before, like, why not make 100 investments of $25,000, and then one of those may turn into $1 billion company. And so you're almost diversifying across a range of 100 investments is the way to think about it, as opposed to investing all your money in just a handful of companies. Maybe investment has always been like that, but it seems like it's particularly that way in tech, that to get to be able to get the risk ratio down, maybe you just need more diversification across a broader range of projects with a smaller amount of investment. Am I thinking about this the right way?
Yeah, 100% you are. I mean, this is one of the fundamental challenges of tech investing, is that you're investing in technologies that aren't quite proven yet. You're investing in something very new, so there's not a lot of data to go on. It's not like a private equity investment where you're investing in like a business that you like kind of realize has potential. You can check all the numbers and you're like, okay, with this team and with this money, I can take this thing, I can grow the revenues by 10 or 20% per year over the next 10 years. You're investing in maybe a one-person team. There's a one-person team at the summit that has a dog walking app that could go really big, but we don't really know. We're going to find out. You're going to be better off doing small bets on a bunch of companies, because they're not all going to work out. Aside from the technology not working, you're investing in like pretty young, untested teams. There's so many things that can go wrong, and they will go wrong at these very early stages. That's just the reality. There's nothing. That's just going to continue to happen. So you have to diversify. You have to make a lot of small bets, and that's what we try to teach at Startup TNT. And that's why it's only a $5,000 check size to get in.
It's remarkable. So let me then go back and find out what it is that Quebec is doing right. Because when I had the conversation with the Premier last week, he recognizes that this angel investing area is an underinvested area. And I know that there are people who've been trying to raise the issue for over a decade. I can think of one person in particular who lobbied me when I was back in politics, and it's still not solved. But tell me what it is that they do differently in Quebec, because the Premier mentioned that the Caisse de dépôt is pretty involved in Quebec. And I wonder what the different approaches. There's obviously some catalyst role that the Quebec financial institutions, which are similar, I think, to our credit unions here, if I have that right. Or maybe it's similar to AIMCO that we have here. But I need you to piece together a couple of things. What is it that they do in Quebec that we don't do here that we should consider?
I'm not an expert in the actual Ontario, Quebec, and how they fund differently. All I can tell you is my personal experiences, and I'm involved in an investment fund in Quebec. And just from talking with the partners of that investment fund and them having sponsored TNT, I think the second summit as well, they just talk about, they were inspired and surprised about what was going on in Alberta, because from their point of view, they looked at Alberta more about energy and fossil fuel. And they were, they said, you need to get your government more involved. They need to have the political will to get more involved, and they need to have a little bit more, they need to risk a little bit and believe in these startups. But again, I think they're nervous because I think they think it's going to be like $100 million investment. We're just talking about, 100, 200 small startups. And how do we help them get over that hump? It's not a lot of money, but it can find, like, just having a proper workspace, a laptop, access to being able to communicate properly. That's all they need. I mean, some of these people are, they're starving scientists and going to school, living in, small apartments. I mean, they're doing their best, but they're brilliant people. They just need some help. And if not, they're going to leave, or they're going to just get frustrated and go do something else. So, I mean, Zach being from McGill, spending time in Montreal, you probably know a little bit more about some of those investment firms. And what's your experience there, Zach? Like, what have you heard?
So my time at McGill was very academic, actually. So I wasn't that closely involved in the tech community, and I actually left McGill in 2012 to move to Alberta. And, I think in the last 8 or 9 years, that's when we've really seen a lot of this evolution of the Quebec ecosystem happen. Their economy's been booming. I think that, I'm also not an expert in the space, but I have talked to people there. They have, I think, maybe a little bit more coordinated effort where the government's putting out a bunch of money in collaboration with people like their local pension funds to set up some funding that goes directly into the companies. And it's through stage-gated processes where, like, the companies are getting a little bit of money, like $10,000, $25,000, then they're getting bigger checks. They provided money to the angel network, building out an angel network. I think that if I look at, like, things that we can and should be doing here, I think a couple of things come to mind. And we are doing some things very well. I think the Alberta Securities Commission has just introduced a new self-certified type of investor, which is going to open up the doors to more people participating in this space. And I think there's a real opportunity to expand on that work and make angel investing accessible to a much broader audience to get more Albertans investing. I think that, we have the Alberta Enterprise Corporation, which provides basically funding for VC funds to invest in Alberta. I think there's an opportunity. Brian kind of brought this up. I think Danielle brought it up too, to do matching funding. We as an organization, we're trying to get people to write checks into these early stage companies. What if the government was matching some of those check dollars? That's a real opportunity too. Following along, just supporting the private sector, adding a little fuel to the fire, and letting the private sector kind of build out their community as they go. It's sort of from behind. Leading from behind, I think, is a great model for the private sector or for the government in this space.
Let me ask Brian to just weigh in on that, because I have had other tech investors suggest that Alberta Enterprise Corp can put money to work in venture funds that invest in early stage, what's called pre-revenue companies. Because I guess since its inception, Alberta Enterprise Corp has been invested in venture funds who invest all their money in revenue generating companies across Canada. So I don't even know if people know that we have this entity called Alberta Enterprise Corp that is kind of already doing this work, but it sounds like they're not taking the risk part. Like, they're investing once the concept is proven out and revenues start getting generated. That's, I guess, the bridge that needs to be, or that gap that needs to be bridged. Do you think that is realistic to think that Alberta Enterprise Corp can play that role?
You know what? I think anything's possible. I think that we have everything in place. We have smart people in government, in private sector, and we have smart students and inventors. I think there's just a communication breakdown. And I just think we need to do a better job putting everyone, at a table and talk about these ideas. Because right now I just feel like we're all doing things on our own and maybe not doing a good enough job just communicating. Like, Zach in a room with some ministers, with Alberta Enterprise Corp, with Innovate, with counselors. I mean, let's hash it out. Let's sit down and come up with ideas. Like, let's whiteboard this stuff. I mean, that's what normal businesses do. So why can't we do that? And I know government's not a business, but I keep coming back. We just need to change the way we think and we approach this, because I'm proud of Alberta. I'm back here now. I'm trying to invest as much as I can, time and energy. I'm trying to help out young entrepreneurs. I give a certain amount of my time and energy to helping people out, but it can't just be me, Zach, and a few other people. But you know what? Having calls like this, I mean, there's incredible people with Alberta Enterprise Group, great business owners that have been here for years. Hopefully they hear this and aren't horrified by my comments, and they actually hear how smart Zach is, and they actually want to get involved and help Zach out and become investors, sponsors. I mean, I just, like, if you own a trucking company and you're highly successful, come out to the summit. If you own a oil field supply company or whatever, come out to the summit. I think you're going to love it. And it's nothing to be nervous about. They're not going to take over fossil fuel, and we're not going to stop drilling for oil and stop using fossil fuel here in the next 12 months. I mean, the reality is we all know that we're going to need fossil fuel for many years to come. We'd be foolish not to think that. We just need to work together and get people at the table with different views and viewpoints. It's just getting the parties together. But if we don't even have MLAs and council people coming to summits that have, over 100 people pitching the last 3 or 4 summits, I mean, that's a problem. Like, I'm sorry. Like, I don't care. I sold my business. If someone's mad at me, I could care less. But the reality is, it pisses me off a little bit. Like, they need to get more involved at all levels.
Hey, let me ask you this, because I think there's sort of a market orthodoxy.
Brian, can you guys still hear me? Or,
yeah, we sure can.
My connection's gone.
Yeah.
Hey, can I just take a moment, Brian and Danielle, because I do want to give a shout out to our friends at Alberta Enterprise Corporation.
Yeah.
They do a lot of what you described, where they invest in like sort of venture stage deals, but they do have one fund in particular that is geared at angel investing, and they actually co-invest with angels in the province. It's called the Accelerate Fund. It's run by Arden Say, and actually they just hired an investment analyst from our community, Yasmin, who was an intern with us, and they're a sponsor of the summit. Alberta Enterprise Corporation is also a sponsor of the summit, so they are really supportive of what we're doing. They believe in what we're doing, but I definitely think there is an opportunity to go even a little bit further up the chain and invest at even earlier stages. I think that's a definite opportunity.
That's perfect. Let me run a couple of ideas by you, because I was starting to say that I think that there is a sense that the free enterprise should operate without government support. However, I would say in our energy sector, we had different tax mechanisms that made it beneficial to invest in some of the smaller companies, say, for instance, flow-through shares from, my dad told me about that years ago, or even the structure that we had for income trust investment, which the federal government got rid of. But we've also had a lot of government involvement in commercializing bitumen, which is now sort of our principal way of getting resource revenues into the provincial government. So it's not like the energy sector has been completely without government support. Oh, looks like we lost Zach. I've had a feeling that he was kind of on his last like something with his connection, but that's okay. I know he's super busy. I don't know if he'll be able to call back in, but I will make sure that people know. Go to startuptnt.com to register for his event tonight. It starts at 4:00 p.m. But maybe I should ask you that, Brian, is the idea of some additional tax measures. So we talked about perhaps Alberta Enterprise Corp being one of the mechanisms, and it sounds like they're beginning this matching approach on the angel side. But I wonder about some of the tax credits, because one of the things that I had heard was that it seemed like the government didn't appreciate the role that this community played, because they got rid of the Alberta portion of the Scientific Research and Experimental Development Tax Credit Program. That being said, I think they brought back some new type of innovation tax credit, but then there was also an investment tax credit for early stage companies. VC has had an approach that they've taken there. So it seems like there are these types of mechanisms, but I don't know that the enthusiasm for the government is there for them. Do you have some thoughts on what might work? What is needed? What is the structure that's needed to just give that little extra support? And I think Zach is back, so I'm going to add him to the stream as well.
I mean, I'm open to look. I'm not an economist, and I'm not going to.
But you're an investor. Like you have a decision to make
but
of whether you put 20,000 here or 20,000 there. Are tax credits one of the things that make a difference for you?
I would have everything on the table, and anything that can make a company be able to develop and grow in the tech sector, I'd be open to looking at. Again, it just comes down to all these ideas are plausible, but we just need to sit down and talk about them with the right people at the table and for the right reasons. So I'm open to all these ideas. I think probably maybe the government's concerned about they've done some of these things before, and maybe there was some fraud with regards to some of the things they invested in. And, that's going to happen, right? But they just have to have the political will to know that, you're going to throw, they say, you're going to throw spaghetti at the wall. And sometimes, it's all it takes is that one idea to stick. And, you might have some trouble with a few investments, but listen, we have to go at this more entrepreneurial. We have to. We just can't be so safe all the time. It's too important for our future because we're just going to be left behind. We've got to push the boundaries and our comfort zone. If you don't do that, you're not going to be successful. And I think some other jurisdictions and provinces and states and other parts of the world I think the leaders are the ones that are going to push the boundaries a little bit and just be a little more risky. I'm sorry, but you're just going to have to make some change. I mean, I come back to it. It's not like we've wasted some, we've done some things that's wasted taxpayer money. I don't think going out and finding 100 or 200 startups and trying to help them be successful is a real risk. I mean, what are we talking about when it comes to overall, Alberta budget? I mean, it's minimal, so I think we just need to, I think it's going to come down to they just have to stop thinking about their term and getting reelected, and they have to start thinking about what's better for future generations. And that's hard. It's easy for me to say. It's hard for them, but I'm sorry, but they're just going to have to start changing the way they think.
All right, let me get Zach to say a word on that too. I don't know if you heard the question I posed to Brian about some of the different tax credits that were in place and then they were gone and one came back. And are you hearing that is kind of an important consideration for investors, is that they want to have some additional tax benefit and encouragement to be willing to put this kind of risk money on the line?
You know what? I think that, if you're a sophisticated investor and you're looking at an individual deal, the tax credit's not going to make a difference. But I think if you look at angel investing as an industry, the government must have access to enough data now that can probably point to if BC's doing it, if Saskatchewan's doing it, if all these other jurisdictions are doing it, is it actually catalyzing more investment? If we, let me give you one example. If we think it's really important to structure the tax regime for our businesses to be the best in North America, why don't we also care about structuring our investment regime for tech investing to be the best in North America? That seems like it goes hand in hand to me. So is that a tax credit or a suite of other things that can happen? I think we should be examining them all very, very closely.
All right. We're going to be bringing in Brian Slawko here as well. He is with Metiquity. I hope that I'm saying that right. And he's going to give us a bit more detail about what he thinks needs to happen in this space from an incentive point of view. Also tell us a little bit about the Calgary market. But we should let you go, Zach, because I know you got a lot of work to do today, and we're really grateful that you spent so much time with us.
Thank you so much, Danielle. Can I just ask a quick question? Did you guys get my comments on Alberta Enterprise Corporation before?
Sure did.
Yeah. Okay.
Yeah, we sure did.
They're one of our sponsors. They're doing good work. I think there's a lot of opportunity for us to do even more good work in the community. And so thanks to all the sponsors at TNT. Thanks to both Brian and Brian, who have invested with us or in some of our deals. And thank you, Danielle, for hosting us tonight. Hope we see all of you tonight. Brian's going to be there. Brian's participating at the event. He's doing his own pitch as part of VC Pitch Night. So
all right, I can't wait. Thanks for that, Zach. Appreciate it. And also, Brian, Brian Wyatt. Thank you so much for taking the time to talk us through this. We sure appreciate it.
It's my pleasure, Danielle. All I ask is that you communicate to all the fellow members of Alberta Enterprise Group, and let's try to get them involved with wonderful people like Zach, because I'm telling you, that's what we need. That's the future of Alberta, is people like him.
No kidding. I'm with you. It's like having a shot of Red Bull listening to him.
Oh, yeah, as well.
I'm feeling energized and caffeinated. Thanks for that, Brian. So let's Brian Slocco, thank you so much for taking the time to talk with us today as well. I sure appreciate it. But let's you heard a little bit of the conversation we had. I'm sorry that they weren't able to stay on, but Zach has a pretty big evening plan tonight. So tell us what your participation in Startup TNT is this evening.
Sure. So just over a year ago, myself and my co-founder Jacques, who I think you know, started our fund called Metiquity Ventures, and so we started that fund to invest in this what I would call the pre-seed funding gap that we see in Alberta. So that's investing in pre-revenue and early revenue companies, typically less than $250,000 if they have any revenue, often not any revenue at all, and so. We've been active in that space for about a year. We've made 4 investments in our fund so far, invested roughly $1 million over the last year, and now we're just at the point where we're starting to grow our fund more quickly. And tonight with Startup TNT, I've been a participant in a few of their investment summits. I think they're just they're great fun events for the ecosystem. They bring all kinds of different players together, whether it's founders or investors or just people wanting to learn more. And so I'm there to network and meet people and listen to some companies. And one of the companies we've invested in a few months ago is one of the Calgary finalists actually as well for Startup TNT tonight. So be there to cheer him on as well.
Tell us what they do. What attracted you to them?
To the one that we've invested in?
Yeah.
Yeah. They're called Sawback Technologies. So they have a ground penetrating radar technology. It's a technology that's been around for a long time, but they've brought some innovations to that technology where they can enable it to be used. Maybe I should back up. So ground penetrating radar is used to see under the ground. So if you think of a big piece of excavation equipment that's going to dig up the ground, they need to know where the utilities are and where the pipelines are so they don't strike them. One example. So what happens today, if you want to locate that stuff, you have someone who goes out and will often push around what looks like a lawnmower, and it's a pretty laborious process, a slow process, back and forth, and you need to have access to the land. You'll be able to walk on the land. It has to be flat. That's not always the case. Often, you know, the land is environmentally sensitive, or the size of the area might be too big, the size of a football field, for example. So what Sawback has done is enabled that technology to be mounted to either a drone so that it can go much faster over our large area, or not need to have contact with the ground, or it can be attached directly to a piece of excavation equipment. So as the arm is about to dig into the ground, they can see underground and get a warning that, you know, stop, there's something there, you need to go have a look, or proceed. And that's an industry that in North America has about a $30 billion problem from striking things underground and accidents happening. So it's an interesting one that we liked a lot because it's, in some ways, it's very simple. It's just an innovation on a technology that's been around a long time, and it's kind of been stale and hasn't seen a lot of change. And he's bringing some great change to something that we think has a lot of great potential in it.
Well, I love the example. I love the example you gave, because I think when a lot of people think about technology, they think about pure technology like Uber or Airbnb, that is a business that exists just in the tech, just online. But there's so many technological improvements that can make enhancements to existing processes that we have and existing needs that we have. And I think that's an excellent example. So what is it that is the barrier for that connection to take place? It's interesting to hear Zach and Brian Wyatt talk about it. It's almost the way I think Brian Wyatt described it like this. He said, if you live in Silicon Valley, you'll all know somebody who invested in a small startup, and now that company's worth $1 billion. And here, our context is we all know junior companies that sold out and got or became large. Like look at CNRL as one of the prime examples. We all have a context that's related to oil and gas. So maybe it's just that we don't know what we don't know about the opportunity in this field. Is that part of it?
Absolutely. I think that's actually a big part of it. I mean, you know, there's a lot of people believe you invest in what you know, and that's a safe way to do things. And a lot of our high net worth investment community, I think, believes they don't know technology. I think they probably know it better than they do from oil and gas technology, or in a lot of cases, they were founders of businesses themselves, and they understand what it's like to build and grow a business. That's how a lot of them made their money, right? So I think part of the challenge is a couple things. First of all, we have to remember, well, there's a lot of momentum going on in the Alberta ecosystem. There's a lot a lot of talk. There's a lot of accelerator programs. There's a lot of momentum and a lot of people that are getting involved, but it's still a pretty young ecosystem in the grand scheme of things. And so from the investment perspective, angel investing, early stage fund investing, we don't have a lot of expertise in the province investing in the kind of technology we're talking about. And so I think that's definitely one of the challenges is, I've spent a lot of time over the last few years that we've been getting ready to build our fund. And as we've launched our fund, talking to people in the community, and many are sitting on the fence and they're thinking about investing in the ecosystem. They want to get involved, but they're not quite sure what the right approach is because they just don't have experience. And there's a lot of things that are different with investing in technology that I think education is something that we need to support, and it's something that we want to support as a fund. So that's a part of it. I think it's education needs to we need to do better, and we need to help people understand more. But how do you do that? Part of that is through like what Zach and TNT are doing. Get them investing, get them participating. At the same time, I think, based on what other jurisdictions do and what other family offices are doing, many of them that are investing in technology now, they invest primarily in funds just because there's professional full-time expertise there where they can get a good diversified portfolio. And then they dabble a little bit on their own in some direct investing and do a little bit of both. And I think by investing alongside funds, you can gain some expertise and see how the process works and get to know and learn more and become a better investor on your own.
Let me then tell you what a dummy I am about investing in tech, because having talked about this all seems like a really exciting space. And but I'm kind of an ETF style investor, exchange traded funds, because I like to own a lot so that I'm more heavily diversified. I could see myself buying a share in an investment fund that has an investment in 100 companies, but I'd be reluctant to make an investment in just one, because then you're not really mitigating your risk. But I don't even know, do those kind of funds exist? Can you invest in an angel fund if you're just a regular old investor?
Well, you hit on a great point. So I think one of the challenges in educating the investment community is access from an investment perspective. So, a traditional venture capital fund is not very accessible to someone who's just getting started, because you probably need to have a $1 million check that you can write to get access into those funds. And that's not very accessible for a lot of people. So what do you do from there to get access? Again, that's where some go to angel investing. And it is a challenge because diversification is important for sure. And so, that's the two main reasons why people are investing in this asset class compared to an ETF or something like you talked about, is really for growth. So investing in the public markets today, the growth isn't really there like it used to be. And so, what's happened over the last 10 years is a lot of companies are able to access capital in the private markets. They don't need to go to the public markets until they're much, much bigger and worth, tens of billions of dollars. And so the growth opportunities in the public markets aren't really there anymore. So the sophisticated investors realize that, and that's why they're investing more in the private markets through early stage venture capital or traditional venture capital funds to access that growth. But diversification absolutely is important. And so, a typical fund like ours, for example, we'll look to build a portfolio of 25 to 30 companies. And that's once we get our fund size up to about, $20-25 million. And that's a good size for us to be able to have a hands-on approach and be able to work with the companies once we've invested in them and add value and make sure they get what they need to grow as quickly as they can. That's our belief in a successful approach that will do well for investors. There's others who might believe that, you invest in 100 and you invest a really, really small amount of money in 100 different companies and just hope for the best. And that's not an approach that we believe in, but there are some that do take that approach.
Well, I guess I'm just wondering, because I'm involved in another investor group that has it's private investment, but if they have the ability to get $5,000 investments from TFSAs and RRSPs, and I don't know if there's a regulatory problem there. I mean, I get it that you don't want somebody to take their entire retirement savings and put it into really speculative angel investing funds. But most of us have a portion of our holdings that are in slightly riskier holdings. And so is that a piece that's missing? Does there need to be a way for me to take $5,000 of my TFSA or my RSP and invest it in a fund like we're describing here?
Ideally, yeah. So from a portfolio perspective, like that's exactly the perspective, say, a larger investor would have, a big family office. They would say, I've got 30% in public equities, I've got 10% in cash, I've got some in fixed income, some in real estate, and the typical allocation is about 10% venture capital as an asset class to look for those enhanced returns and higher growth opportunities. The challenge is when you get down to the smaller investor, a retail kind of investor who might only have $5,000 or $10,000 to invest. There's definitely some regulatory considerations in how you do that. There are some new Securities Commission things coming in Alberta where I can't remember the term they use. If you have a degree in finance or you have certain designations, then you're not an accredited investor. They'll allow you to invest $10,000. I believe it's up to $10,000 per company to a maximum of, I think, $30,000. So I think this is actually a really good example of what's happening because of how I mentioned the public markets aren't as critical as they used to be. So more and more investors are moving into the private markets. And as smaller investors move into the private markets, the regulators need to find ways to regulate that and find ways to do it safely, because the risk is that those are the kinds of investors that can get taken advantage of and get sold things that aren't appropriate for them because they're just not as experienced and
totally agree. But if it is limited, I mean, there is sort of a limit to the level of risk, but it does seem like if you want to get the kind of dollars that we're talking about in this area, just having an access to a larger pool of capital is important, as opposed to if you always have to rely on those who are just high net worth individuals, and then you've got this communication piece of trying to convince them and expose them to the ideas, then it's going to be a pretty slow growth to try to get people in. It seems like you need to have a way of having a larger number of people participate in this marketplace. So do you think this is the right approach that they've taken then by expanding it out, but at least limiting it? Or do you think there's more that they could do on that front?
I think they have to take baby steps. I mean, I know I'm not an expert on those subjects, but I know people would like to see more because, I mean, you're right. You're talking about, the high net worth, the accredited investors are like, the top 1 or 2% of the population. And there's a lot that don't fit into that category. But at the same time, looking at, ecosystems throughout the states and other jurisdictions that have grown their ecosystems at this early stage, it is traditionally those high net worth investors and family offices are the ones that do invest in it. And again, I think it goes back to the fact that our ecosystem is younger and we haven't begun to see them investing in the space yet. So they're just not as familiar. And that's complicated. I really believe it's complicated by the fact that right now in Alberta, a lot of the wealth is starting to transition between the generation that earned it and the next generation that's being responsible for it. So we have people in their 30s, maybe 40s, that are starting to have responsibility for all this wealth. And they probably don't have as much investment expertise as their parents did. They have a different set of expertise. And so they might be more comfortable with risk. They might be less comfortable with risk, but there's a transition happening. And I've seen it. I've seen it in investors I've been talking to, and there's some dynamics there that I think families are figuring out that might have an impact on the speed with which that capital can flow. But I think it really comes down to education's a big part of it, and people like to invest in what they know, and money likes to follow money at the same time. So, I think for even through the work that we've done with Startup TNT and a couple of our investments, I mean, our philosophy is we want to go in first into a company. If a company needs to raise $500,000, which I would suggest, I like to use the term 500,000 is the new 5 million. The way that the venture capital and technology has evolved over the last 10 years, it used to cost a founder probably $5 million to get investments in hardware and all the resources they need to get to a point where they have some amount of traction. But today we've got all this cloud computing resources that have really dropped the cost of starting a business. And so what that means is for 500,000, 750, maybe $1 million, we can take a company from zero to something where they've got early revenues and good signs of traction. We can do it a lot quicker than we could 5 and 10 years ago. But we don't need anywhere near the same amount of money that we did years ago. And so the the whole risk return dynamics of investing in venture capital have changed a lot, especially for, if you think of the older generation that earned the wealth, they're going to remember the 1990s and the dot-com era, and that's going to scare them. But things have changed so much since that time. Again, what I think back to education is there's a lot more resources for companies. It takes a lot less money. They have a lot more support. They can get to a point where we know if it's going to work or not in 2-3 years. And again, if it takes 500,000 to get there, it's a lot different than millions of dollars, And at the same time, the overall, this is U.S. data, but if you look at the capital loss ratio in the venture capital industry, in the 90s it was 50%. In the 2000s, so far up from 2000 up to about 2015, it was down to 20%. And just for all these reasons I'm talking about, like the risk profile really is a lot different than some will remember it being from 10 to 20 years ago.
I think you nailed it. That's exactly what it is. I think when we look at what happened with the dot-com bust, that's the context that people are probably still considering. And I hadn't considered that, in fact, the economics have been flipped on its head. Normally, in businesses, the more established the industry, the more money you need to get to a point where where you can earn revenue. This is the reverse, which makes it kind of even more exciting. So let me pose something to you about what more is needed. I mean, is it really just an education, just putting on the table the kind of facts that you mentioned, or does there need to be proactive government policy?
Yeah, that's a really good question. I mean, I think education is only one piece of the formula for sure. Policy. So I was involved in the last round of Alberta Investor Tax Credit Program and those incentives, and I was testing that structure, the venture capital corporation structure at the time, and I put it in front of a lot of investors, and the ones people I spoke to, it wasn't a consideration. There are certain fundamentals that I think, whether you're investing in oil and gas or you're investing in technology, there's a management team, there's the business model, there's the market, there's a number of fundamentals we're looking at, and tax credits were always below those top 5 business fundamentals that any of the investors I spoke to were interested in. In that particular case, it was compounded by the fact that it was complicated, it was difficult, there was a lot of risk of tax credits getting clawed back, and it was difficult, and I've seen it be, I don't know if misused is the right word, but I've seen it used where a company is out raising money, they're eligible for the tax credit, but they're essentially selling a tax credit to an investor as an investment return, not selling the fundamentals of a business. So that's where I have a big problem with it. If one of those unsophisticated investors we talked about puts their $5,000 or $10,000 in because someone says, well, you've got this 30% tax credit, there's a return right there. Well, I don't believe that. I think we have to look at it as, are the fundamentals of this business right? Do they make sense? Do we have a chance to actually build a business here and make money? If so, a tax kind of credit is only gravy on top of something to incent capital to get off the fence. But from what I've seen in the past, it was just, the approach was overly complicated, and I'm a little hesitant personally, just because I've seen how it does get used, and when you tie that back to raising money from more of the average investor, there's opportunities for it to go the wrong way there. I think the investment community can do a really good job of determining what companies deserve to raise capital and which ones don't. The tax credit kind of goes to throw that off a little bit, if you know what I mean. It makes it easier for maybe a company that shouldn't be raising money to go and raise money from someone that doesn't quite know how to evaluate it. And why not let the investment community do what they're good at and pick the ones that seem like they're going to have a path forward. And we do have other sources of non-dilutive capital in the province, from Alberta Innovates and lots of other sources of non-dilutive capital. That's how we look at it. If we put $500,000 into a company of equity, we're for sure going to expect over time to get another $200,000, $300,000, $500,000 in non-dilutive money through grants or loans, and that's going to help leverage the investor money that does come in as equity, because it's non-dilutive capital, right?
So do you think that it's sufficient then? I guess the point Brian Wyatt was making is, why is it that a $1.6 billion of venture capital manages to be spent in Quebec, but it's only something like $250 million here? What is it that Quebec is doing that we're doing wrong? Or is it just that we will get there eventually, and it's just a matter of letting the market work? How do you see it?
I think back to what I said earlier about the the age of our ecosystem, and it has to grow and evolve. So if there's some government policy that can speed that up and help it along, that's great. But we have to get the private capital moving in the market to understand how to support these companies. In Ontario and Quebec, BC, there's a lot of venture capital money that flows into those markets. But as I said earlier, the way that the private capital markets has evolved, those companies used to go to the public markets for that money. And so what is making up the most of those billions of dollars of investment today is the category that's referred to as mega deals. So they're $50 million or more in size. So to give you an example, in Alberta in 2020, I think we raised $455 million of venture capital money. About 60% of that went into 4 companies. Those were, $50 to $70 million deals. Good for those companies. It puts them on the map, and it's going to launch them into a place where hopefully they can be big enough to give back to the ecosystem in the future. But it doesn't leave a lot of money for the kind of companies we're talking about today. The ones that need $500,000 to $1 million. If you look at the data from the Venture Capital Association, the amount of money across Canada that was invested in $100,000 to $500,000 deals is a third in 2020 from what it was in 2016, and it's only $10 million. In Canada, $2.7 billion invested in the first quarter this year, I believe was the number, and $4 million of that went into deals that were $100,000 to $500,000 in size. Like it's nothing, but it's the economics of the businesses that invest that money. They're $500 million to $1 billion funds to operate effectively. You can't invest $500,000 at a time. They need to invest 10, 20, 50 million at a time to be successful as a business, right? So you bring that back to Alberta, the Alberta lens on that. From the data we have here, we know that 50% of the companies in our technology ecosystem have $500,000 or less in revenue. So those companies can't access traditional venture capital. If you don't have 1.5 to 2 million of revenue, you're not on their radar screen yet, right? So then where do you go? The next group you're going to go to is the angel group. It's really fragmented here. It's not like you can walk down one street and go knock on a bunch of doors. But what's happened in Canada, not just Alberta, is because venture capital funds are doing larger deals, they've left a gap behind, right? If they used to do a $5 million deal, now they're doing a $15 million deal. Well, the angel groups that report their data, they've gone from investing in $1 million deals 5 years ago to $3 million deals last year, right? So the angels who normally would invest in the early stuff we're talking about to support them, again, the groups that report their data, they're investing in bigger transactions just because there's more revenue. It's a little bit easier to feel like there's some easier due diligence there for some. If it's bigger, it feels safer. Let's invest in that instead. Mm-hmm. So it's left an even bigger gap for that $500,000 deal. There are some angels who make those investments. Again, they're not the big, large organizations that report it to the associations, but it just shows you the focus has completely changed from smaller transactions to much bigger ones at a time when the need of the founders has gone from big dollars, from 5 million down to $500,000. So they've gone on this completely divergent path. So what we're missing is what I, again, call a pre-seed fund, which is designed to invest in a company that's got either pre-revenue or a little bit early revenue. The only way you can make $500,000 investments is if your fund is designed to be smaller, so 10, 20, maybe $50 million. You can't be a $100 million fund and focus on $500,000 investments. Right. It's just not viable, right? So we need to support the growth of new and emerging managers that are going to focus on investing in these earlier stage companies. It's happened in the States. There are well over 2,000 of these types of funds that have formed in the last 5 to 7 years in the States, and I think we're just 5 to 7 years behind the path of what's been happening in the States. And
so you do talk though about how government policy could accelerate that. Let me put something to you, because I know it's been controversial in Calgary that Calgary Economic Development Authority set aside $100 million for business attraction. But I did speak with one candidate for council who said they're going about it the wrong way. They should, instead of giving big bets, a small number of big bets, they should be doing sort of what we're talking about here, which is providing smaller amounts to more companies as a way of planting the seeds. There are also those who say they shouldn't be doing it at all. But I wanted to pose it to you. If you had some advice to give to Calgary Economic Development, could they leverage that money a little bit better? I think they've got $55 million left.
Yeah, so I think they've actually recently headed in that path. So, I've had conversations with them over the last few years, and I think what happened when they put that fund out there is that I know they got kind of overrun by the types of companies we're talking about. I think in their mind, they didn't create the fund for those kinds of companies, but they're the ones that came asking for the dollars. So you might be aware, and I think it was, I don't know if it was 6 weeks ago that the city of Calgary put out an RFP for a fund manager to that they want to allocate $7.5 million to for exactly that purpose. They want to be an investor in a private fund who is investing in earlier stage companies in Calgary. And I believe, if I remember what I read correctly, they're the first city in Canada to do something like that. So I think that they've realized there's a problem that needs to be supported with earlier stage companies here in Calgary, and they've decided to allocate $7.5 million towards solving that. So if that gets into the hands of a fund like us or another that's investing in that space, then that's great. That's a great vote of confidence, and it's a great step towards accelerating the path. I think being an investor, Alberta Enterprise Corporation could do the exact same thing, right? I mean, we know, I'm sure you've talked lots about the types of funds that they've invested in, and so can they become a leading institution like many in the States that see the need for emerging managers and investing and supporting emerging managers, smaller funds that are going to support the earlier stage ecosystem?
Well, I like what you're saying too, is that if a fund gets too big, they start looking for the bigger investments. In a way, that actually limits, if government did decide to invest in this direction, it kind of limits their exposure. If the most effective funds are actually on the smaller size because they're making a larger number of smaller investments, that actually seems to get to the issue of risk management. Now, tell me a little bit about the Calgary space, because I think part of what people like to talk about is that there are some billion-dollar companies there. I guess that's the technical definition of unicorns in your world. And there's, as I understand it, there's 4 of them. I think there's almost been this idea that if only we could get these big companies, because I think that was part of the business attraction pitch that we were making to Amazon, then all these little companies will follow. And I don't think I don't know if that's the right approach, but tell me, do you think because though we've at least got that core beginning in Calgary, is that going to have a positive impact of attracting more?
I think it'll definitely have a positive impact. I'm not quite sure how long it'll take, but I think what you typically see, the path that you would see is that, a company like, I don't know, Solium or Benevity, they've had these big exits. They're valued at over $1 billion. Well, there's some founders there who made some significant wealth in those transactions. And what we need is for those founders and the senior management team who've made some money there to turn into angel investors or to turn into supporters of funds that are going to invest back into the local ecosystem and invest at an earlier stage. That's one of the ways for sure that the ecosystems can grow. So we got those big success stories. They've got some capital. How do we get them being active? And I think some of them are, but the more that they can become active, the faster we're going to accelerate the path. I think the other thing that for sure that will start to happen is there's a lot of employees in those companies who they go along for the ride. They get a lot of experience. They see what it's like, and they go off and start businesses of their own. They've got a network of founders that they used to work with who have some capital, who, again, you've got a relationship with someone from the past. It's a lot easier to go and raise the first $500,000 from someone that knows and trusts you than just from knocking cold on doors and trying to find your way around, right? So I think that those big companies, to the extent that they can at some point start to give back into the local ecosystem, and I think it's a natural fit for many to want to do that. I mean, I think that's a global theme about supporting local today, obviously, but they've been through the battle. They know what it's like to build a business. They know how to evaluate businesses like that. So it's natural for many of those. And again, I think the path is similar to many of the existing family offices. They spent time building private companies. They have a natural affinity to want to give back and see how they can invest and support those in their local ecosystems to build a future for their kids and their grandkids, right?
All right. Is there anything else that we should consider as we're looking at the way that the government might play an accelerator role? You seem to be pretty kind of hands off and let the market sort it out, and it's just a matter of catching up to some of the other jurisdictions. But is there anything else that you would recommend?
Yeah, I don't know the answer from a policy perspective. To be honest, maybe I'm just from what I saw with the last tax credit program, I'm a little bit hesitant, and those things, they come and they go sometimes as well, and that can make it even more difficult. So, but if there is a tool there that can help that can help to speed up the transition of capital into the space, then I think that's great. But I think what we need, to be honest, is we need more funds who can work with organizations like Startup TNT, who have the expertise to be a lead investor, to be willing to spend all the time to do the due diligence, to negotiate the terms of a deal, to share the due diligence with people like investors in TNT, to make it easier for them to want to make a decision to invest. And then people who are, part-time investors and just learning can have more comfort if they've got someone to follow that they know has some expertise that they can trust. It's a lot easier for the rest of the money to start to follow. So I'd really like to see there's more funds established in the ecosystem that can take that approach. And I think we can do a lot of good on our own just by educating the investors that we work with and making it easy for them to say yes instead of giving them reasons to say no. We remove the mystery around this space that's been created. A lot of it, think of it as a mysterious black box of what the heck is venture capital. So if we can increase transparency, provide better access to investors, and educate them better, I've seen success in the investments we've done so far. We've invested in 4 companies, and each of those there was angel money that came after we came. And but it's working from my perspective. If there's other tools to speed that up from a policy perspective, great. I just I'm not too sure right now what they are. So
well, thank you so much for playing that education role with us today. I sure appreciate your insights.
Well, thanks for having me. I really appreciate it.
You got it. That's Brian Slotko, who is with Metiquity, and he's quite right. I feel a lot more confident about this topic than I did when I began. I hope you feel the same way, because this is going to be an emerging growth area, not just in Calgary and Edmonton, but potentially beyond. And as we talked about, not just necessarily pure tech plays on their own, but also ways in which technology can be combined with traditional industries so that we can continue to see growth there as well. So hopefully you have some thoughts on that. Maybe you'll join in and look at startuptnt.com tonight. As I mentioned, they begin at 4 o'clock. They go to 8 o'clock. It sounds like it's not all business. It's also a lot of fun as well. So I hope you'll be able to tune in. I'm Danielle Smith, Alberta Enterprise Group. We'll be back at it again next Thursday. Thanks for joining us today.